All right, so let's jump right in to IBM's fourth quarter 2024 earnings and kind of see what we can uncover about their performance and maybe, what it might signal for the tech landscape.
Sounds good.
Overall, we've got their press release, the prepared remarks document, and a pretty hefty PDF packed with financial data to kind of help guide our deep dives today.
It's quite a bit to unpack, but that's exactly why we're here, to
Yeah.
break down the noise and try to extract those insights.
Exactly. So what jumped out at you when you first kind of looked at their earnings and guidance?
I think what's really striking is that IBM is exceeding expectations across the board. Their CEO, Arvind Krishna, is particularly proud of surpassing the midterm goals. They set back in 2021, achieving a 6% CAGR over the past 3 years,
Yeah.
exceeding their own projections, which is really impressive when you consider some of the economic headwinds that companies have faced.
Yep.
Yeah, 6% growth rate is pretty impressive
Yeah.
on some. What I find even more noteworthy is their record-breaking free cash flow of $12.7 billion. That signals a pretty healthy and robust business, wouldn't you say?
Absolutely. This kind of financial strength gives them a lot of flexibility, allows them to make strategic investments, explore new opportunities, and potentially even, weather future economic storms.
Okay, so let's dig into the specifics here. Software seems to be like the shining star for IBM, making up 45% of their business now, and a 9% revenue growth in 2024. That's a significant jump.
It really is. A key driver of this growth is Red Hat, which IBM acquired back in 2019. They've seen a remarkable 17% revenue growth in the fourth quarter alone, becoming kind of a cornerstone of IBM's software strategy.
It was a big move at the time, that acquisition. But it looks like it's paying off handsomely now. What's behind Red Hat's success, and what does it tell us about IBM's overall strategy?
Well, Red Hat specializes in hybrid cloud solutions and open source technology. And it seems that, IBM recognized the growing importance of these areas early on. This strategic acquisition wasn't just about buying a successful company. It was about positioning themselves for a future where cloud computing is really dominant.
So you're saying IBM's success with Red Hat is not just about Red Hat itself, but also about IBM's foresight in recognizing where the tech industry is headed.
Exactly. It shows an ability to adapt and evolve, which is crucial for any company that wants to remain relevant in, today's fast-paced tech environment.
Let's move on to another area that's generating a lot of buzz, generative AI. Everybody seems to be talking about it these days. What's IBM's play in this space?
Well, this is where it gets particularly interesting. They've been tracking what they call their generative AI book of business, which basically measures, the revenue generated from anything related to Gen AI, whether it's software consulting services or anything in between.
Yeah, I'm curious, how big is this book of business?
Prepare to be surprised. It's exploded to over $5 billion since they started tracking it.
$5 billion.
Yeah.
That's a staggering amount, especially when you consider that, generative AI is a relatively recent phenomenon.
And here's the kicker. Almost $2 billion of that growth happened just in the last quarter alone. That kind of rapid expansion is a clear indicator of the growing demand for generative AI solutions.
So where is this growth coming from? Is it primarily driven by software sales, or is something else contributing to this AI boom?
That's a great question. It's a bit of a split. Software contributes about 20%, but the real driving force behind this growth is their consulting services, which makes up a whopping 80% of their Gen AI business.
Wow, so they're not just selling the tools, they're helping businesses understand how to use them effectively.
Exactly.
That's a smart move.
Yeah, companies are eager to jump on the AI bandwagon, but many need guidance on how to implement these complex technologies.
Absolutely.
Yeah.
And in terms of the specific models they're using for generative AI, is it all IBM developed technology, or are they taking a more diverse approach?
That's an interesting question. What's intriguing is that they're not limiting themselves to just their own technology. They do utilize their own models, like the cost-effective Granite models, which are specifically designed to be accessible to a wider range of businesses.
That makes sense.
Yeah.
Cost is always a factor, especially when you're dealing with computationally expensive AI models.
Right. But they also recognize the value of working with client-specific models and even incorporating open-source AI options. So it's about finding the best solution for each client, rather than pushing a one-size-fits-all approach.
So they're casting a wide net in the AI space, both in terms of the services they offer and the technology they utilize. Now, I'm curious about their consulting services as a whole, beyond just AI. What's the picture like there, especially in this dynamic market?
Yeah, well, the market has definitely been shifting. While they saw a slight dip in revenue, down about 1%, it's important to consider the broader economic landscape. Businesses are reevaluating their priorities and, spending more cautiously these
So
days.
it's not necessarily a reflection of IBM's consulting capabilities, but more of a reaction to external factors.
Right. But here's the encouraging part. They had record-breaking signings in the fourth quarter, a 23% growth indicating strong future potential and continued client confidence. It seems clients are still very much interested in what IBM has to offer.
But if clients are more cautious with spending, what's driving that record-breaking growth in signings?
Well, that's where the AI connection becomes even more intriguing. A significant portion of those new bookings, $1.5 billion to be exact, were directly related to AI.
So the slight revenue dip might just be a temporary blip while companies figure out their AI strategies and then turn to IBM for implementation.
Yeah, that's a plausible explanation. And it's not just general consulting that's benefiting from this AI-driven growth. Their Red Hat consulting services are also experiencing a boom, bringing in almost $3 billion in annual revenue.
That speaks volumes about the power of strategic partnerships, like the ones they've cultivated with AWS and Azure. They've recognized that collaboration can be key to unlocking new opportunities and reaching a wider audience.
Absolutely. It's not about trying to dominate every aspect of the tech landscape. It's about building a robust ecosystem that benefits all involved.
All right, so we've covered software AI and the overall health of their consulting services. Let's shift gears and talk about infrastructure, an area where IBM has faced some challenges in recent years. How did their infrastructure segment perform in Q4?
You're right, infrastructure has been a bit of a different story. They experienced a 6% revenue decline in the fourth quarter, which is, not insignificant. But it's important to understand that this isn't necessarily a sign of weakness or a failing strategy.
So what's driving this decline then, if it's not a sign of inherent weakness in their infrastructure offerings?
Well, much of it can be attributed to what's known as product cycle dynamics. In simpler terms, it's about the natural ebb and flow of new products being released and older ones phasing out. It's not always a straight line of continuous growth.
Ah, so it's more about timing and product cycles than a fundamental lack of demand for IBM's infrastructure solutions.
Exactly. And there are some notable bright spots within infrastructure, too. Their Z16 mainframe, for instance, has been remarkably successful, exceeding expectations.
Really, I've had to admit, I kind of thought mainframes were becoming a relic of the past.
It might be surprising, but the Z16 has actually been their most successful mainframe program ever. The installed capacity is up over 30%, demonstrating that there's still a significant demand for this seemingly older technology in specific contexts.
That's fascinating. So it seems mainframes aren't going extinct just yet. What does the future hold for IBM's infrastructure segment?
Well, they have the Z17 launch on the horizon slated for mid-2025. This new product launch has the potential to really revitalize their infrastructure segment and drive renewed growth. It'll be interesting to see how the market responds.
So even with the decline in Q4, there are reasons to be optimistic about the future of infrastructure at IBM.
Mm.
They're not abandoning their legacy systems, they're innovating within those spaces, while also strategically adapting to the evolving landscape of cloud computing.
That's a keen observation. It seems IBM is recognizing the need to balance tradition with transformation, catering to both those who rely on their established systems and those who are embracing, newer technologies.
Okay, so we've explored the performance of their various segments, software AI consulting and infrastructure. Before we move on, I want to pause and ask you, our listener, what stands out to you from what we've discussed so far? What's piquing your curiosity? We'll delve deeper into IBM's overall performance and guidance after a short break.
Sounds good. Welcome back to our deep dive into IBM's fourth quarter 2024 earnings. We've been exploring their performance across different segments, and now it's time to kind of zoom out and examine the bigger picture, specifically their earnings guidance for 2025.
Right, we've seen how they've performed, but what are they projecting for the future? What's their outlook for the coming year?
Well, despite some of the market uncertainties, IBM is projecting revenue growth of at least 5% in 2025. This indicates a pretty strong belief in their strategy and their ability to navigate, a potentially turbulent economic landscape.
5% growth projection is certainly optimistic, especially given the current, global economic climate. What factors are contributing to their confidence? Are they simply riding the AI wave, or is there like a more nuanced strategy at play?
It's not just about AI, although that's certainly a significant factor. They're expecting software to continue driving growth with projections approaching double digits. Consulting is also anticipated to accelerate, reaching low single-digit growth, and even infrastructure is projected to contribute about 1%.
So they're not putting all their eggs in one basket, so to speak. They're forecasting growth across all their segments, which suggests a balanced and diversified approach. But what about profitability? Are they focusing solely on top-line growth? Or are they also prioritizing margin expansion and, efficient operations?
That's a crucial point. IBM is emphasizing not just growth, but profitable growth. They're targeting margin expansion and ongoing productivity improvements, signaling a commitment to sustainable financial performance.
It sounds like they're taking a holistic approach, aiming for a healthy balance between growth, profitability, and, long-term value creation. But let's break down their guidance a bit further. They're projecting software to approach double-digit growth. What's fueling this continued optimism in their software segment?
Well, as we discussed earlier, Red Hat is a major contributor to this projected software growth. Their hybrid cloud and open source solutions are resonating with businesses, seeking flexibility and agility in their IT infrastructure.
Right, Red Hat seems to have become like a strategic linchpin for IBM. It's fascinating how an acquisition made several years ago is now playing such a pivotal role in their future growth.
Yeah, it highlights the importance of strategic foresight in the tech industry. IBM recognized the transformative potential of cloud computing early on, and their acquisition of Red Hat has positioned them to really capitalize on this shift.
Okay, so software is said to be a growth engine. What about consulting? They're expecting an acceleration to low single-digit growth. How do they plan to achieve this rebound in a potentially, cautious spending environment?
Well, their focus on AI implementation and integration is a key factor here. As businesses increasingly adopt AI solutions, they'll need guidance and expertise in navigating the complexities of integration deployment and scaling.
So IBM is betting that their consulting expertise, particularly in AI, will be in high demand even if overall spending remains somewhat subdued.
Precisely. They're aiming to be the go-to partner for businesses, seeking to unlock the potential of AI, providing not just the tools, but also the knowledge and support to implement them effectively.
And what about infrastructure? While it might not be the star of the show, they're still projecting a modest 1% contribution to growth. What's the rationale behind this projection?
Well, they're likely anticipating continued demand for their existing infrastructure solutions, particularly their Z systems, which cater to specific industries and use cases. And as we mentioned earlier, the upcoming launch of the Z17 could provide a boost to this segment.
So even in an era dominated by cloud computing, there's still a place for these robust and reliable systems, especially for businesses with mission-critical operations that demand a high level of security and stability.
That's an important point. IBM's infrastructure business may not be experiencing the same explosive growth as their software and AI segments, but it remains a steady and dependable contributor to their overall performance.
Right, so their guidance suggests a multi-pronged approach. They're expecting software to lead the charge, consulting to accelerate in infrastructure to provide a steady base. But beyond these projections, what other key takeaways should listeners glean from IBM's earnings and guidance?
Well, I think one key takeaway is the importance of adaptability and transformation. IBM has successfully transitioned from a hardware-centric company to a software-led one, demonstrating their willingness to evolve with the changing tech landscape.
They haven't been afraid to shed legacy businesses and embrace new technologies, and this agility has positioned them for continued growth.
Another key takeaway is their strategic focus on high-growth areas like AI and hybrid cloud. They've made significant investments in these areas, both organically and through acquisitions, and these bets are now paying off.
Their acquisition of Red Hat is like a prime example of this strategic foresight.
Exactly. And finally, their emphasis on financial discipline, margin expansion, and shareholder value demonstrates a commitment to sustainable and profitable growth. They're not just chasing revenue, they're building a business for the long term.
These are valuable insights, not just for understanding IBM's performance, but for anyone navigating the complexities of the tech industry today.
Absolutely. IBM's story offers a compelling case study in how established companies can adapt, innovate, and thrive in a rapidly evolving market.
Before we wrap up, I'd like to turn the question back to you, our listener. What are your thoughts on IBM's earnings guidance? Do you share their optimism? Or are there potential challenges that you see on the horizon? We'll continue this discussion in the final part of our deep dive, where we'll explore the broader implications of IBM's performance for the tech industry as a whole. So we've spent quite a bit of time, dissecting IBM's fourth quarter 2024 earnings and their projections for 2025. Now, I'd love to kind of shift gears and explore the broader implications of their performance.
Yeah, let's zoom out and consider what IBM's success or, perhaps challenges might signal for the tech industry as a whole.
For instance, we've talked extensively about IBM's strategic shift toward software and cloud computing. Is this a trend that we're seeing across the entire tech landscape, or is IBM an outlier in this regard?
It's definitely a broader trend, I think. Many tech companies are recognizing the importance of recurring revenue streams and the scalability of cloud-based solutions. We're seeing a shift away from those traditional hardware-centric models towards software as a service and subscription-based offerings.
So IBM's transformation in this area could be seen as a bellwether for the industry, like a signal of where things are headed.
Yeah, that's a good way to put it. Their success with Red Hat, their focus on hybrid cloud solutions, and their aggressive push into AI all kind of point towards a future where software and cloud computing are dominant.
And what about generative AI? IBM's massive growth in their Gen AI book of business is certainly eye-catching. Is this simply a case of them capitalizing on a hot trend, or is there something more substantial at play?
Well, I think while some level of hype is inevitable with any emerging technology, generative AI is proving to have real staying power. Its ability to automate tasks, generate content, and solve complex problems has the potential to revolutionize various industries.
And IBM's not just riding the wave, they're actively shaping it. Their focus on consulting and integration services suggests that they're not just selling tools, but providing the expertise to implement those tools effectively.
Right. They're positioning themselves as partners in AI adoption, guiding businesses through the complexities of integration training and scaling.
And this seems crucial, as many businesses are eager to embrace AI, but may lack the internal expertise to do so successfully.
Exactly. IBM is bridging that gap, providing the knowledge and support that businesses need to navigate the AI landscape.
Their approach to AI also highlights another important theme: the power of strategic partnerships. They're not trying to do everything in-house. They're collaborating with other tech giants, leveraging open source technologies, and really building a diverse ecosystem.
Right. This collaborative approach seems essential in today's interconnected tech world. No single company can dominate every aspect of the market. Partnerships allow companies to leverage each other's strengths and create more comprehensive solutions.
It's about recognizing that the tech landscape is a complex web of interconnected technologies. And that collaboration can really be a key to success.
And speaking of success, IBM's emphasis on financial discipline and profitability sends a strong signal to the market. They're not just pursuing growth at all costs, they're focused on sustainable long-term value creation.
This disciplined approach seems particularly important in a time of economic uncertainty. Investors are looking for companies that can weather storms and deliver consistent returns.
Exactly. IBM's strong free cash flow and commitment to margin expansion provide a sense of stability and confidence.
So as we wrap up this deep dive into IBM's earnings and guidance, what key takeaways should we leave our listeners with?
Well, I think first, the tech industry is in a constant state of flux, and companies need to be adaptable and willing to embrace change. IBM's transformation from a hardware-centric to a software-led business is a prime example of this adaptability.
Right.
Second, strategic foresight is crucial. Companies that can anticipate future trends and position themselves accordingly are more likely to succeed. IBM's early focus on cloud computing and their acquisition of Red Hat demonstrate this foresight.
Yeah, and the third, collaboration is key. The tech landscape is becoming increasingly interconnected, and partnerships allow companies to leverage each other's strengths and create more comprehensive solutions. IBM's collaborative approach to AI is a testament to this principle.
Right.
And finally, financial discipline and a focus on profitability are essential for long-term success, especially in a volatile market. IBM's commitment to margin expansion and shareholder value provides a model for sustainable growth.
Right. IBM's journey offers valuable lessons for anyone navigating the complexities of the tech industry today. Their success is a testament to their ability to adapt, innovate, and collaborate.
We hope this deep dive has provided you with valuable insights into IBM's performance, their strategy, and the broader trends shaping the tech landscape. Until next time, keep exploring, keep questioning, and keep diving deep.